What's going on, guys? This is Aaron from Departures Capital, and we're here with Alan Pangbourne, President and CEO of Chesapeake Gold. It's a pleasure to have you back. Alan, how are you doing today?
I'm doing well. How are you, Aaron? And it's good to see you.
I'm great. Everything's good. The weather's good today, so can't complain. So like I said, pleasure to have you back on the channel. Can you start by giving us a quick update on the company and telling us everything that you've been up to since we last spoke, and that wasn't that long ago?
No, and I think that was a bit by design. So Alan Pangbourne, President and CEO of Chesapeake Gold. Principal project is the Metates project in Mexico. 19 million ounces of gold, 483 million ounces of silver. So a massive, massive deposit, often listed in the top 10 undeveloped gold and silver deposits in the world, which obviously is significant. And, I guess what we've really done, the most important thing we've done is 3 days ago, can't remember exactly, we put out an updated mineral resource.
Yes, so that's very, very significant news. Let's talk quickly about that. So the company announced an updated mineral resource estimate, which includes 15.8% increase in gold grade of intrusive and intrusive breccia zone. Can you tell us more about that and what it means for the company?
It's the culmination of a piece of work we started when we first took over management. Yeah. So when we first took over management, we needed material for metallurgical testing. The whole crux of what we're planning to do is based on this new process that we've got. And we did that drilling and we got a nice surprise, high grades, 19 to 20%. We went, that's cool. Then we drilled another 18 holes, and now you've got 23 holes, and they were all showing the same thing. And so a couple of well-known geologists who work with me sat down and started going through all the data to try and understand why. Before we put out bells and whistles, the grade's gone up 16%, we needed to understand why. And so really that news release the other day was the culmination of that work. And it shows that the grade in the intrusive and intrusive breccia, which is the focus of the first phase project with its 31-year mine life and all that good stuff, is 16% higher grade in the gold part. That's quite significant because when you increase the grade, your total costs per ton don't change, but you put more value per ton in. Right. And so that value goes straight to the bottom line as revenue without the costs going up incrementally. So it's really significant and will help the economics of the project probably significantly.
Yeah, that's very positive news. So what are the next steps for the project? What does that mean for the company? So
we've been working on putting all of the blocks together to be able to do a PFS as soon as we get everything together, right? So the rest of this year is really focusing on getting all of the bits of information that when you go to an engineering company, they go, where's the mine plan? Where's the geology? Where's the met test work? Where's the topo? And they've got this big, long shopping list. And so we've been working on that last year, and we're continuing all that work this year. We've also started quite late in the year last year. We've had our first meeting with the Ejido, the local community management, the president and the secretary. Went very well, first meeting, first time we've ever met them, so it's nice. And we've had a few phone calls since then, and we're heading back down in March, April sometime, the second meeting. And the aim is to get a exploitation agreement so that local community agrees with the appropriate consultation that, yeah, we're going to let you build this mine here. That's key. So we're working on all of those key bits. Metallurgical test work is very key. Communities to get this exploitation agreement. Water rights is another one. I've been through this before with a previous company. If you don't have an exploitation agreement, you don't have water rights, you will never get a permit. It's just the way Mexico works. So we're working on all that stuff. And as I said, that will all build the cards in the deck to be able to produce a PFS.
So Chesapeake's quite a unique story. You've got a long-term plan in place, but why should investors be paying attention right now at this point?
Probably a couple of things. One, we're trading very cheaply for the amount of gold that's in the ground. We've got a new technology that not only will reduce the costs and allow us to treat lower grade refractory sulfides, which currently 1 gram is tough for an autoclave plant, but it's also green. It has a much lower environmental impact. And that's not being green to be green. It's a outcome of the process. If you don't have to grind it and float it and put it through an autoclave, you don't use as much energy. You don't use as much water. Yeah, if you don't use them, you have a lower environmental impact, whether that's greenhouse gas, whether that's water consumption that impacts the communities. And then finally, there's no tailings dam with this process. So again, it's environmentally more attractive for the local communities. Yeah. So that's why the investors should be looking at it. We believe we're greener than most, and that's not just greenwashing, it's real. Massive, massive deposit in Mexico. Yeah, so if you want to play ounces in the ground, we're probably one of the cheapest ounces in the ground at the moment. And we've got a PEA out that shows over $1 billion NPV just for phase 1. So it's get in on the ground floor.
Those are some very significant points. So let's talk about gold now. I follow gold very closely. I'm sure you do as well. Lots of ups and downs over the last couple of years. What's your outlook on gold? We recently got a bit of a pullback. I thought it was going to hit 2000. We didn't get there just yet. We did make it above 1900. So how do you feel for the rest of this year? Good, bad? Let's hear it.
It's the relationship to the US dollar, right? And as long as the US economy stays strong and the Fed keeps wanting to raise rates to cool it down, it has a negative impact on the gold price. And I think what we saw is the gold price was starting to head up 1900, and we were all sitting there going, come on, a little bit more, yeah, to break that magic 2000 again. What you were seeing was, I think the market got a bit in front of itself, and it was expecting them to come out, and they haven't done this one yet, then the next meeting and go, yeah, we're going to skip one, or, slow it down. That hasn't happened. The economies are looking more resistant and bubbly than the Fed gave them credit. And it's the same in Canada. Yeah, the economies seem to be doing well. China's starting to open up again, which will increase demand for other stuff, not gold. Gold's the fear, inflation, all those things. Yeah. So until he can play whack-a-mole with inflation and actually get it to slow down and stay down, I think gold for a while is going to struggle. But once it turns, and it will, yeah, people are starting to feel the impact of interest rates. I follow the Australian press, hence the accent, plus the Canadian press, plus what the Fed's doing. And whether it's housing prices, disposable income, going out to restaurants, you're actually starting to see in Vancouver restaurants closing. They survived COVID, and now they're falling over. Yeah, and it's the impacts of inflation, and it's the impacts on the public. Yeah. You go out one night a week instead of 3 nights a week. You buy beer instead of cocktails. All of those things, people are complaining about the meat price. So, I was recently in South America, and they were talking about the death of the Argentine barbecue, which is like in Argentina, that's sacrilege, man. They've got great steak, but it's got so expensive. Yeah. So it's taking longer to get through the system, and it hasn't started pushing the prices down yet, but people's spending habits are changing.
Definitely, you can feel that in the market. Even personally, spending habits for sure, more conservative, less spending. So we'll see what happens. It's going to be an interesting year to see how it plays out. Very data dependent for sure. So finally, where should investors go for more information on the company?
The obvious place is go to our website. Most of the latest videos that I've done, interviews like this one, are there. The latest presentation that I'm going to be going down to BMO actually tomorrow. So heading down to the BMO conference. I'll be presenting at the PDAC conference as well the following week, and I'll be obviously at PDAC as well. If anybody's looking for me, you can reach out to me on either on our social media or email or through the website. Would love to catch up with people.
That's great, Alan. Well, thank you for that information. I enjoyed the chat and look forward to having you back on in the future. Best of luck with everything.
Thanks, Aaron, and have a great weekend.
If you like these videos, kindly hit that subscribe button and the bell for notifications. Drop us a comment down below. We'd love to hear from you. And finally, always remember, Departures Capital is for information, education, and entertainment purposes only. Don't buy or sell a stock because you heard it on here. Buy or sell a stock because you've done your research, you've done your thorough due diligence, and you're making your own personal investment decisions for yourself. This video is not financial advice. Furthermore, this video may or may not have been sponsored by the companies that we've profiled within this video, and we may or may not own shares of any of the profiled companies in this video. If you want to know the full disclosure details, check the description down below along with thoroughly reading our disclaimer. Thanks so much for watching, guys, and I look forward to seeing you in our next video.